Alrighty, what is up everybody? It has been a couple days since we've looked at a chart. I've been taking care of some other business things, but we are looking at Algorand, which has turned bearish in the last couple days. Now, the market's been experiencing a huge sea of red everywhere, and in the next video we're actually going to be looking at Bitcoin and Ethereum as well. So we're going to be doing more of an overall market analysis, but what are we seeing here? Well, I'm going to look at my indicators first. Now, you can see the MACD down here has definitely crossed into bear territory, but we've been here for a minute, so there's nothing saying we can't cross back to the upside. Right? Now, there's nothing saying that we will cross back to the upside, but there's nothing saying we can't. Matter of fact, our stochastic has been chilling for quite a while down there at the bottom, which means it's coiled, it's consolidated, it could see a pop, right? So let's take a look. We came down out of the overbought territory all the way up to 90 on the Wilders, or the RSI. Okay, that is impressive. One thing we do see here though, let me grab this trend line, is we do see this bearish divergence of lower lows and higher lows being formed right here. Let me get this right there and right there. So you can see we have a higher low being formed on these points and a lower low being formed on our RSI, which is a bearish indicator. Now we can already see a general pattern of a bear flag down and drop, a bear flag down and drop. So does that mean that we could be doing something like that? Well, yes it does. And that is why right now my positions are actually converted to DAI, DAI. I get a 2% APY on it. It's a stable coin. I'm not horribly worried. So right now I am biding my time. Now, what would make this actually look like a bull reversal? And when would I stop out if I was still in it? Well, if I was still in it and we test this line right here, right around $1, there we go, $1.02. So if we break below $1.02, I believe that'll be confirmation that we are yet again going to bull flag down, bear flag down again. Okay, so if we break below that $1.02, that's definitely scary territory. Now, inversely, if we break up above the 131 mark, then I would be very interested to see what the rest of the market is doing, and I may potentially buy back in, because this very well could turn into an inverted head and shoulders. If we have this come back up, okay, and then move like that, okay, that's going to be a very nice inverted head and shoulders, which is something that we could watch out for. So right now I'm watching either for the bear flag and continuation downwards, or a possible pump into this inverted head and shoulders. Now the stochastic says it's possible, the MACD says we've been relieving pressure for a minute, and our RSI says that we are mid-field on the index, okay, which means we can definitely head back up to that overbought territory. So we have room to move up. It's just the possibility, or the potential rather, that it will. Right now our downside is going to be all the way down here at 54 cents if we dump again. However, our upside right now, before we get this consolidation back, is only $1.39. So right now our downside, or our risk, is much higher than our upside, or our potential, if we were to enter right here. So for me, that's going to be a no-go. Now this is the one-day chart, and there is something else we can look at. Now if this is a bear trend where we bounce up, come down farther, bounce up, come down farther, then we will have points of retracement along this. Now we're going to use the Fibonacci retracement. First we're going to use it back here to see if we have found any point. Oh, let me drag that a bit higher. Right, so we are currently at a 50% retracement, but there has been no real point found. So let me go ahead and do this then. What we're going to do is take the retracement from a short point of view and go like this. Now we can see that this dropped down all the way to here bounced back up, we hit a 50% retracement to the upside. So the one thing that you always want to look at is if you're being bullish and you're playing the long term, you want to be at least aware of what the bears are looking at. And right now the bears are looking at this. The bears are saying we spiked down, we hit 50% retracement, and they're going to be looking for an entry on a short position. Okay, so you have to understand just the way we take a look at our retracement for bullish standards, right? So by bullish standards, if we hit this 60% retracement back down, then we can use a fib extension and chart our way back up. But because this move is bearish, we want to chart the short side and say, okay, if we touch 118 again and the market doesn't look stable, it may be time to get out for a minute. So always, guys, if you're trading to make profit, which is the only reason I could see you trading, and we all trade for profit. If you have profit right now, take it. Take your profit. Like I said, personally, I've moved all of my positions, or at least 90% of my positions, into a stable coin where I'm just generating APY, staking it, and I'm perfectly content with that because I know DAI is never going to fall. It's never going to see these 10 to 20% fluctuations. So anyways, guys, leave in the comments below, are you in Algorand? What are your thoughts? What are your thoughts on the chart? The Discord link should be in the description below, and if you want a chart analyzed, leave that as a comment as well. Don't forget to like the video and subscribe. Thank you, guys.